Well, there's plenty going on within financial markets at the moment. Of course, everything around Greenland. We've also got the Japan issue, but I wanted to shed a light on what's happening in the energy space, most notably within natural gas, up almost 30% over the course of a few days. Why is this happening? Where is it going to go from here? And is this just going to be short term in nature or the beginning of a wider period of strength for gas prices? So first and foremost, I mean, look, this is was a moving graphic. I've kind of frozen it at the point where it was maybe the most dramatic in nature. And this just shows that we have got a bit of a cold snap at the moment in the US, but it's going to get worse. And so we're seeing this Arctic air coming down into the US and into Europe over the coming weeks. This image is for the 24th of Jan. And if you look at the sort of key along the bottom, you can see we're talking about -15, -16, freezing temperatures across essentially the entirety of the US, apart from Florida, where they seem to just be living the dream, but everyone else will be suffering. Now, of course, what happens when you see freezing temperatures like this? Well, people essentially use their heaters. They try to warm up their homes, and therefore the use of natural gas goes through the roof. So that sort of sharp shock in terms of demand is coming. It's starting at the moment, and it's only going to get worse over the course of the next 2 weeks. That means that suddenly we see, due to weather effects, a significant shift in terms of the demand dynamic, and that has an impact on prices. Now, if we look in terms of US gas demand, you can see that we are spiking at the moment. Similar kind of thing that we saw back in 2025. And again, in 2024, it's that kind of time in the year where generally you do see spikes. And so that gives us the opportunity to kind of look back at exactly what happened with price action previously and see what happened on that occasion, whether it was long-standing or short-lived. And I think that's the question mark here, right? Because we've already seen a major spike. Is this going to continue and persist? Is this going to be something that's short-lived and you sell into it? You know, that's the kind of thing I wanted to look at today. Why is it happening? And is it going to persist? So as you can see here, a surge in terms of demand for gas in the US off the back of the beginning of a roughly 2-week cold snap where really significant sub-zero temperatures come into play across a huge swathe of the US. And in Europe, we're expected to feel the pinch in the same way, but maybe not to the same extent. But certainly also Europe expected to be hit. In terms of, wasn't that one that I wanted to look at? So the next part of the story is what's happening between the US and Europe and the EU. And this ties into the first part of the story. So, of course, with everything that's happening at the moment, and as I speak, I have been listening to Donald Trump rambling on for about half an hour now. It appears to be the case that he's sort of stepped back from too harsh a rhetoric. I mean, undoubtedly, he has come out and said that they need Greenland, but he's also said that they're not going to go in with their military. But that has sort of seen gold pull back, which is sort of a leading indicator of what markets are perceiving the tone to be like. But nonetheless, we have the story around gas in Europe because, of course, gas previously was dependent on supply from Russia. You can see here a massive decline from 2021 pre-Russia-Ukraine to where they were in 2024, and it's gone even further than that. So this weaning of Europe off of gas imports from Russia, well, what countries have sort of made up that gap? Well, significantly, it's been a decline in terms of usage alongside a rise in terms of demand from the US. That's the biggest shift across the regions, essentially, that they're getting supply from. So increasingly reliant on the US for gas, because now they're pretty much saying we're not going to get any gas from Russia. But what happens when the US and Europe suddenly their relationship sours? You know, you see the potential for a tit-for-tat trade war that then has an impact on the ability to buy and the willingness to buy gas from the US. Now, of course, when you see a breakdown in terms of supply chains, so you're sort of desperately seeking out supplies elsewhere. And we've seen it in the past, because what happened with Russia, when essentially the supply of gas from Russia was significantly impacted, we saw a massive spike in terms of gas prices across the world, because essentially Europeans had to try and find LNG from wherever they could and pay whatever they could to be able to top up their storage levels. Now, storage levels are absolutely key, and it feeds into the two narratives here, right? So the fact that you've got the US and Europe essentially going at it and butting heads over this Greenland issue, and that's not going to go away immediately, I don't think. That is notable, considering the fact that we're also talking about the US and Europe when it comes to the trade of gas and the impact of the temperatures. So you can see here that from a historical perspective, the storage of gas in Europe is actually very low. Now, there's a number of reasons for this, but certainly I would say that one of the dominant reasons is that there's going to be some element of complacency coming in. Of course, after what happened with Russia and Ukraine, there was a clamor to make sure that European gas levels were as high as they possibly could be. That's why you can see that the highest line out of all of these is that purple line that we can see, which is 2023. So you can see that once we saw that sort of crisis coming into play, the Europeans really did make a particularly concerted effort to make sure that gas levels were topped up. Well, the fact that the Europeans have managed to sort of diversify away from that meant that there was a little bit more of complacency coming in. You can see the 2025 levels. They didn't necessarily top them all the way up to the top. They sort of rode it around, and they were sort of happy at lower levels than they were in previous years. Well, where are we now? We're even lower than that, and you can see here with the thick black line on the left. So European gas levels are low, and now all of a sudden we have this major cold snap. So that means that we're going to see a sharp drawdown in terms of gas in storage in Europe, and at the same time the possibility of a supply squeeze if we see a potential breakdown in relations between the US and Europe, and suddenly that supply isn't as forthcoming as it was before. You start to essentially look elsewhere. You have to pay higher prices. And so you're back in that same situation you were sort of back in 2021, 2022 kind of times. So really, it's an interesting story that has seen a number of factors all sort of play out together, leading to a sharp spike in terms of gas prices. So let's look at exactly how things are in terms of natural gas, NTG. So you can see over the course of the past 3 days, we've gone from 2.8 all the way up to 3.6 essentially. And you can see also this comes off the back of a period of sharp declines into an area of support that you can see historically we don't necessarily spend all too long sort of about below these levels. You can see prior to that crisis, 2021 into 2022, prior to that crisis, the lows were sort of around these levels. You can see here the 2.6s down to here sort of 2.4s. And then we can see here that's around where we sort of bottomed out at the moment. And we've also come into this same support level that we had here on the 25th of August of last year. So remember, we were talking about the idea that we saw a spike in terms of gas prices in gas demand last year and the year before that. So let's look at exactly what happened in terms of gas prices at the sort of turn of the year, or the beginning. It's around sort of mid-January kind of time. So there's January 2025, and then January 2024 is around here, right? So you did see a little bit more downside here, but essentially the sell-off was ending, and it provided us with a period of gains that essentially ran through into the midway point of the year, right? So where are we here? So we just come off the back of a pullback, and then the rallies lasted us up until sort of mid to late March. So it's shorter in nature, but then we sort of see wider swings. So what would that mean in this context? Well, undoubtedly, the gains that we see in this time around are more significant in nature. I mean, it's an absolutely huge candle right now. But you can see in the past that these big candles can follow one after another. When we're talking about a 30% return, it's worthwhile noting that a 30% return on something that's declined massively is much more achievable than something that's at a high level, right? So if you see a stock collapse 90%, rising 30% is very different from a 30% gain on a Mag 7 name that's at record highs. that in mind, the lower the price goes, the more likely you are to see some pretty significant percentage moves on the way up. What you really got to look at is what are the levels that have previously been respected, and you can see that on this occasion. So just trying to see if there's sort of trend line resistance coming in here. So in any case, in the extreme example here, which is essentially akin to a breakdown between the US and Europe, a trade war that means that it's no longer viable for the Europeans to buy from the US. Therefore, they've got to look away from both Russia and the US and start to buy from probably Asia, which will by and large be from China. And it will probably be Russian gas turned around on boats and then sold back from China to Europe, as is typically the way. But on those occasions, you know, in that situation, sorry, you know, these peaks suddenly don't seem so crazy. But really, you want to be relatively conservative in nature. I don't necessarily think it's going to go as far as that, but certainly you can see that the highs are more like your sort of 4.9s, 5.2s. We're at 3.5, 3.6s. So we've still got a fair old way towards the upside to come. And bear in mind, from a weather perspective, this is yet to really play out. I mean, we're at the infancy of this. It's going to last a couple of weeks. Whether it sort of shortens or lengthens in terms of that storm could impact exactly how this plays out. But certainly as we move forward, if US-European relations don't improve, and certainly if we see a worsening in terms of that relationship and a potential ramping up in terms of a trade war between the two sides and increased tariffs, because remember, it's not so long until the 10% comes on at the beginning of February. If that happens, it points towards a potential for further upside to come into play in terms of nat gas prices. And then if the storm essentially lasts longer than people think might be the case, and we see a significant sharp drawdown in terms of gas storage, meaning that there's going to be greater demand to try and fill it up from wherever possible. Remember, that demand supply picture changes not just for this 2-week period. All of a sudden, that massive drawdown means that these regions, be it the US or be it Europe, are clamoring to try and source that demand to be able to refill the storage, just in case we get the same kind of thing from a weather effect down the line. So it's a really interesting story, one that's going to be playing out over the course of the coming weeks. We've already seen roughly 30% upside over the course of the past 3 trading sessions, and we could be in for plenty more, depending on how things play out between the US and Europe, and how things play out in terms of the weather between those two same regions. So make sure to keep a close eye out on this for further potential volatility. Of course, it could come crashing down if suddenly Europe and the US are all hunky-dory and suddenly this weather just blows away and goes back up to the Arctic. But as things stand, I would expect to see possibility of further upside if we don't see improvement on both those fronts.